Welcome back. This is Corporate Radar. As promised, let's get straight to our next corporate that's joining on the show. That's Vinati Organics. And remember, the Ministry of Finance has imposed anti-dumping duty on Para-Tertiary Butyl Phenol last month. To discuss the impact of this on the company and how's demand as well, we're joined by Ms. Vinati Saraf Mutreja, the MD of the company. Hi, Vinati. Good morning and good to have you at the start of this fiscal. Well, tell us, how does this duty that's been imposed impact y'all, and how much as a percentage of sales do you all get from this particular product?
Sure. Good morning. Thanks for having me. So the impact of this duty is actually not very significant because PTBP product as a whole is not a very large product in our portfolio. For example, butyl phenols, which comprises of four products, that itself is, say, about 15-20% of my sales mix, and PTBP is half of that. Now, again, half of the PTBP is exported. Also, on that, the duty doesn't apply. So it's really applicable on the domestic sales of PTBP. If you were to ask me to monetize this impact on an annual basis, it would be somewhere around 4 crores or 5 crores in a year. And that's really it.
Okay, all right. So let's move on then. Let's talk about business on the whole. How has demand been in quarter four? Has there been some improvement from quarter three? And if you could give us a rough guidance about FY25, how do you see things shaping up?
Yes, absolutely. Quarter four, we are seeing a recovery of the destocking. It seems like the stocks are over and customers are buying more, ordering more. We do expect this fiscal FY25 to be at least 20-25% higher than the previous fiscal.
This is Vinati. Hi, morning. This is top line, 20-25% higher. Vinati, hi, morning. If you can hear me, you said, okay, I think we lost that. It's frozen. So we'll just connect Vinati back with us and adjust a bit from now. And
but there's a big he is back with us. Vinati, sorry, we couldn't hear you at that time. So I think there was some issue with your video. But I wanted to ask you a little bit, first of all, of course, complete what you were saying earlier, and also wanted your thoughts on how the export markets are shaping up, because there were some challenges over there. But what is the way forward now?
Sure. As I was speaking, we are seeing a very good recovery in demand for most of our products. The destocking seems to be over. Customers are sitting on very little or zero inventory, and hence the reorder has picked up. So Q4, we've seen that trend from Q4, and we expect FY25 to be 20-25% higher than FY24. And this mostly is coming from the export market. Domestic as well, we are seeing demand shaping up quite strongly, and our products, the new products, antioxidants, are getting approval with more customers, and hence there's good traction across products.
Vinati, hi. So 20-25% higher top line growth in 25 over 24 is what we should expect, right?
That's right. That's right.
Could you guide us on broadly what kind of margin outlook you see for FY25? Are costs higher still because of this entire Red Sea issue? There's this sort of bridge collapse in Baltimore. Many have pointed out for certain products, maybe I think largely autos, etc., because that was a crucial link to the port. There was an issue. I'm not sure if that has any impact for your business. I mean, broadly on margins and costs.
Sure. So we have mostly a pass-through formula type, basis for most of our products, and I expect the EBITDA margins to remain similar as FY24, and you can expect a same level of growth of about 20-25% in bottom line, similar in line with top line.
On the export market, I just wanted to understand, because of the Red Sea issue and now the Baltimore issue as well, how much higher are costs compared to what they were, say, 5-6 quarters ago? I mean, is there a big impact that you're seeing?
Well, freights to the US or Europe have doubled from all-time lows. But then again, we have seen much highs during COVID. So it's still not gone up to those levels. It's still say 1/4 of that or 30% of that. So it's and it's being transferred, and most customers are absorbing that cost.
All right, and you're saying margins will be similar to what we have seen in this year, so it should be in that vicinity of around 26% odd?
That's absolutely right, around 26, 27%.
Got it. In FY25, what kind of a capex plan have you laid out, and which are the capacities that will come on stream?
Sure. So we are expanding. We are adding a new line for ATBS. That's about a 300 crore investment, and that will be complete by, say, December 24. We have almost commercialized, or rather started trial production in VOPL, which is our subsidiary, where we have new products, new niche products like MEHQ, Guaiacol, and a few Anazole, and a few others. But they will also start in batches. Some of the other products like Anazole, 4-methoxyacetophenone will start around October. We will also be adding a couple more antioxidants to our portfolio next year. And we are contemplating an expansion in butyl phenol as well, as the demand has picked up.
All right, Vinati, we'll leave it at that. Thanks a lot for joining us and speaking to us about the business. Well, for the market, by the way, although the headline index is flat, like we were saying earlier, there's so much action beneath the surface. The mid-cap index is now up almost 200 points. When we come back, we'll also try and get you an update on what's happening in the commodity markets.